The rising order that applies to any sovereign nation is that of maintaining its territorial integrity. And while that happens to be the priority in the changing paradigm of where we stand today, often words like Third World War being upon us, the geopolitical tensions being on the rise, dissolving states of international lines of command, defense is one area that is of top priority for any given nation. With this in mind, there are countries that have turned net importers if they weren't importing at all, and then there are countries that have turned from being a net importer to an exporter as well. And yet, there are countries that have made a seismic change in terms of what they exported. Let's say a decade ago to what they're doing now. And with this as the backdrop, there's one country from an economic standpoint on various services and manufacturing-led sectors which has now turned its eye for good and has caught the attention of one and all. Now, with the country being ours in the reckoning, it is only safe to say that the government is no longer having a unilateral goal of protecting its sovereignty only, but it is also focusing on turning this sector into a business opportunity. And when we talk about business opportunities, it would have meant that the participating companies would have given opportunities to investors like you and myself to make money. And with so much known, all of us feel that we've made merry when the music was playing from a defense standpoint. The only question that all of us are asking now is whether the music is really over for this sector. Now, given India's stance, there's a lot that we can still expect, particularly a goal that you will be astonished to hear when I bring the numbers to light. And this episode talks about everything that you need to know as far as India's defense sector is concerned. So while we do that, we will also talk about the record M&A deals seen in India at a time when most of the major economies have seen a decline, and understand the factors driving it. You're watching Informed Investor, the Third Empire, an initiative by Research and Ranking. Let's begin. India is one of the strongest military forces in the world and holds a place of strategic importance for the Indian government. Therefore, the Indian defense manufacturing industry is a significant sector for the economy. The industry is likely to accelerate with rising concerns of national security. Demands for defense equipment in India has been growing due to the ongoing territorial disputes with Pakistan and China over the ownership of the northern state of Kashmir and the northeastern state of Arunachal Pradesh, respectively. Now, over the last 5 years, India has been ranked amongst the top importers of defense equipment to gain technological advantages over rival countries such as China and Pakistan. Now, to modernize its armed forces and to reduce external dependency for defense procurement, several initiatives have been taken by the government to encourage Make in India activities via policy support initiatives. The top 3 largest market segments of the Indian defense sector are military fixed-wing naval vessels and surface combatants, missiles and missile defense systems. The data released by the Ministry of Defense recently suggests that the government efforts are bearing fruit, with the defense exports hitting an all-time high of 14,000 crores during FY22. And the private sector has been accounting for almost 70% of these exports. The Ministry of Defense, in fact, is preparing to launch 75 items in the field of unmanned systems, robotics, intelligent surveillance, and more to propel India towards the 5-year defense exports target of nearly 35,000 crores set out by Prime Minister Shri Narendra Modi ji in 2020. For perspective, Indian defense exports were worth 8,434 crores in the pandemic-affected year of FY21, 9,115 crores in FY20, and 2,059 crores in FY16. It is important to note that approximately half of India's defense exports between 2017 and 21 were to Myanmar, and about 1/4 were to Sri Lanka. Since then, the exports to Sri Lanka have now reached a standstill in the recent times due to its prevailing economic crisis. However, during FY21 in particular, it was the US that was India's biggest customer from an export standpoint. Now, other major regions to which the Indian defense exports are routed include Southwest Asia, West Asia, and Africa. So what is propelling the rise in the defense exports, you may ask? The government of India has been putting emphasis on making India a global defense manufacturing hub. This is possible if it works to upgrade its defense technology and forges a solid path towards independence. The FY23 budget served as a guide for creating a dynamic network to promote the nation's defense sector's R&D, design and manufacturing capabilities. At the start of 2022, the Ministry of Defense released a list of over 200 defense platforms and equipments which will be produced indigenously. Furthermore, contracts worth rupees 54,000 crores have been inked for domestic procurement in the past few years. 7 new defense undertakings which were incorporated are rapidly tapping new markets and expanding their businesses. For encouraging the industry and startups, the government is also constantly supporting development in the defense sector through several initiatives. First is the deregulation of the defense sector. In the 90s, India had aggressively followed the export promotion of defense equipment. Traditionally, it had not supported the export of arms that can fuel conflicts indirectly and has been primarily exporting low-value or non-lethal defense items like light weapons, army uniforms, trucks, patrol boats, etc. In 2001, India deregulated the defense sector for private players, and in 2002, procedural guidelines to streamline the procurement of defense equipments for armed forces was promulgated. In 2014, strategies for promoting the export of defense products were formulated and specific incentives were introduced under the foreign trade policy, and the Ministry of External Affairs was tasked to facilitate the creation of lines of credit for foreign countries to import defense items from India. In August 2020, the Department for Promotion of Industry and Internal Trade also suggested several measures to attract foreign investors and boost the domestic defense manufacturing. This includes capital expenditure, R&D subsidy, tax exemption, cheaper finance, and a one-stop shop for clearances. Second is the increasing strategic dependence. In order to enhance India's defense and the aerospace industry, its strategic independence is very crucial for it to become a global economic and military powerhouse. Considering the given equation, strategic independence can be enhanced by decreasing defense imports and simultaneously growing defense exports in the global market. So therefore, the third point becomes the reducing import dependency. India is one of the largest importers of defense equipment in the world. A few years back, the defense industry was highly dominated by public sector companies, and the private participation was not sufficient to build a state-of-the-art defense regime and modernize the defense infrastructure. Now, due to its geographical structure, India needs to continuously upgrade its defense infrastructure. Currently, many defense startups and think tanks have emerged, and India is focusing on developing its internal capabilities, which are backed by various government reforms. Exports have now grown six-fold since 2014, and the government is continuously backing this sector. The benefits to the private sector becomes the fourth point. The private sector has evolved to occupy a crucial role in India's defense exports journey. More than 85% of the export authorizations were granted to the private sector during FY20. As of 2020, almost 500 industrial licenses were issued to nearly 300 private sector companies. Despite the high gestation period, the sector has the potential to offer tremendous domestic and export-related opportunities to the private sector. Furthermore, the embargo imposed by the government on import of various products will enhance the domestic production, thus opening various foreign export avenues for the private players. Fifth is the Make in India effect. The government's ambitious Make in India project seems to have spawned an unlikely export boom in the defense sector. Personal protective items, offshore patrol vehicles, ALH helicopters, SU avionics, coastal surveillance systems, Kavach MOD-2 launcher, and the FCS spares for the radar, electronic system, and light engineering mechanical parts, amongst others, are in the roster for exports. The Ministry of Defense is also eyeing other contracts to boost defense exports. These include the sale of 2 Dornier military aircrafts to Sri Lanka and the light combat aircraft Tejas. Both the aircrafts are manufactured by the state-owned Hindustan Aeronautics Limited. In January this year, India and the Philippines inked a $375 million deal for the sale of the BrahMos supersonic anti-ship cruise missile. In India's defense sector has undergone major reforms as the government is trying to strengthen the nation's defense prowess by reducing the dependence on imports. In the recent years, India has been working to boost its defense export industry by improving its manufacturing infrastructure, simplifying its export control regulations, and promoting defense products abroad. As a result, India's defense exports have been growing steadily, and the country is now exporting a wide range of defense products, including small arms, aircrafts, naval vessels, and armored vehicles. Some of the countries that have purchased defense equipments from India include the United Arab Emirates, Saudi Arabia, and Vietnam. The Defense Ministry has set a target of 1,75,000 crores worth of defense production by 2025, which will include an export of 35,000 crores. The major role in achieving this goal, with a contribution of 70 to 80%, could be done by the India's defense public sector undertakings. Given these challenges, it would appear that the 35,000 crore export target set by the PM is an ambitious one. However, achieving the same is possible by tapping the right opportunities, by smartly utilizing our existing competitive advantages. It is important to note that traditionally India has been amongst the top 5 global arms importers. But the latest figures give hope that India can make gain in the field of defense exports. Therefore, the latest figures is a significant milestone for a country that was at one point totally dependent on imports. Having said that, India's defense sector has turned attractive for investors like you and myself on the back of a healthy order book, revenue expansion, and the government's major push for localization. Now, many analysts believe that the defense sector is still favorably placed given the opportunity size from a domestic as well as an export standpoint and the potential growth over many years. The recent conflicts closer to India, Europe, and other parts of the world have strengthened the urgency and the need to increase capex and localize defense production, which makes the sector a lot more attractive to investments going forward as well. Despite global macroeconomic headwinds signaling economic woes, coupled with the Russia-Ukraine conflict and its ensuing impact on the global commodity markets, supply chains, inflation, and the financial conditions, India's deal-making ecosystem has continued to remain robust. Merger and acquisition activity in India has surged to a record of about $175 billion this year, up from $145 billion in 2021, driven by large deals by corporates and the buyouts by the private equity firms. This comes at a time of volatile stock markets and a downturn in the tech sector specifically. Even before I dive deeper into the deal-making trends and the factors supporting it, I would urge you to take a look at our Third Umpire episode dated 3rd April 2022, where my dear colleague Mayuri Yadav had covered the details of what exactly are mergers and acquisitions, along with the reasons and the benefits of mergers and acquisitions. Now, as the mergers and acquisitions activity in India touched a record peak of $175 billion, private equity and venture capital contributed to about $65 billion of this number, and the balance was largely Indian corporates merging or acquiring other businesses within India. Now, this trend clearly demonstrates that the Indian corporate sector is keen to take large inorganic bets to increase the market share in a growing economy. Now, it is important to note that other regions are witnessing the largest year-on-year decline in the M&A activity since the 2009 global financial crisis. The US has been the hardest hit, dropping 40% so far, followed by the Asia-Pacific region, where the M&A activity is down by approximately 30%, and Europe, which has seen a decline in the M&A activity by about 24%. Now, in the private equity-backed M&A activity, India crossed China for the first time since 2008, accounting for 28% of the global market share in the private equity-backed deals. China's market share, on the other hand, was 24% only during this period. Now, the deal value was boosted by large transactions such as the $60 billion merger of HDFC Bank with the parent Housing Development Finance Corporation Limited, the $7.1 billion merger of L&T Infotech and Mindtree, and the $6.2 billion acquisition of Ambuja and ACC by the Adani Group. So what explains the rise in the M&A activity in India? Despite global macroeconomic headwinds, India's deal-making ecosystem has continued to remain robust. The pandemic intensified the demand for digitization and brought about a significant change in how organizations operate. The deal activity in India has been spurred by these fundamental shifts. A stable banking system and timely policy initiatives like the Production-Linked Incentive Scheme and Atmanirbhar Bharat initiative have helped the domestic trade environment. Several factors are driving the M&A activity, such as the reasonable valuation of businesses, large pool of capital available with the private equity investors, and the return of foreign strategic investors. Along with other factors like buoyant cash reserves, increasing FDI inflows, and strategic considerations, India's upward deal momentum has been sustained by an enabling regulatory landscape governing the mergers and acquisition deals. Now, with the introduction of the pragmatic reforms, including the National Company Law Tribunal, or NCLT as it's well known, fast-track merger process, as well as permissions for cross-border mergers, the monitoring landscape for M&A in India has become very facilitative. So, is the trend expected to continue going forward? Well, yes. Multiple factors such as a play for scale and dominance, taking advantage of disruption and the transition to more sustainable business models are the factors which will drive the M&A activity going forward. Large Indian conglomerates continue to play for scale and size and are willing to pay a premium for it as new development gets more and more expensive. Additionally, structural reforms like the ONDC, which is the Open Network for Digital Commerce, and the OCEN, which is the Open Credit Enablement Network, along with the digitization of the logistics sector, will challenge old business models. This will also lead to consolidation in physical and the online business models to provide the consumer with an end-to-end solution. The transition to sustainable business models in the energy and the EV spaces will also lead to a number of opportunities. Indian corporates, with their strong and well-capitalized balance sheets, are also looking to aggressively consolidate themes across existing sectors and are looking to foray into new sectors as well. Now, with the opening up of several sectors and investor-friendly reforms brought in to facilitate the ease of doing business in India, we could see an increase in the quantum of investments made in the country in the future. The boom in the public M&A practice is expected to continue, with more entities opting to go public in the domestic as well as the foreign markets. Further, greater participation by investors could mean an increase in the volume of the average size deals. Now, as I conclude this episode, many industry watchers are cheerful about the fact that the deal-making activity will be further boosted through more consolidations across various sectors such as financials, technology, healthcare, energy and power, industrials for value creation, and market share gain. Industry experts also believe that while the deal activity in India has seen a consistent upward trend, the Indian market could soon become a $200 billion M&A market. So, the party in the Indian M&A space is expected to continue going forward. With that, this is Raj Mehta signing off, wishing you and your loved ones the very best. Thank you.
Did you like watching this video? Then download our app Informed Investor to watch more such informative and interesting videos.